Hi, my name is Amy. Thank you very much for watching and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I really appreciate that. I had today's video is going to be all over the place, just to warn you. So, the ambassador of Quan on X, he has been having these recorded Twitter spaces, and I will link this post in the description down below because a lot of them have happened already. But tomorrow at 11 a.m., they're going to have the Rec Shares one where they talk about ULTI, because this came about because the fund manager for ULTI actually put out a Batman signal and said, hey, I know that ULTI's had a rough start and we've had some management issues, but I would really love to talk to the creators and make sure that we're all on the same page and we can explain some things that happened. So that's going to be a really interesting one that I am attending tomorrow. Today's, I forgot to check to see what time it was starting, so I didn't wake up, at least I didn't get out of bed in time to attend it, but I did watch or listen to the recording. And then by the time, because I go to the YieldMax ones at noon on Wednesdays as well, and then I went to the Curve one yesterday at 3 p.m. So what happened is, let's just go through each of these as they went through. So I think the most interesting thing for me with Howard from Curve was he is really betting on the debasement strategy. Like, he thinks that the dollar debasement is the play for 2026. And so that's why you see that in KYLD. And he was explaining how, because when they launched, we had that pullback. So if he gets out of the things that he was in to begin with, he cannot capture the recovery when there is a relief rally or whatever. So they're not getting their reserve as quickly as they wanted to, but they are slowly building their reserve, and they're just hoping to give us, a consistent distribution amount and reliably NAV neutral or NAV appreciation with KYLD, which has been paying, I think, around 30%. And so one of these days, KYLD will actually sit down and do comparisons when it's been out for a little bit longer. And so today, with XFunds, which is our favorite blocks ETF, we have the David Nicholas. It was with David Nicholas, and I wasn't really aware that there was a lot of blocks cannot go down, blocks always up banter. It was, and if I glossed over it, I apologize, but none of these funds, especially Bitcoin related ones that are higher volatility, so you can get the 30% yields, they're not going to be immune when Bitcoin has a major pullback. So I haven't, on my own part, been alarmed by blocks losing some of its NAV because of the conditions of Bitcoin. I've been buying blocks. So his talk with Ambassador Khan was also very interesting. And to me, it was interesting to hear about, because they played a game, and it was like buy, get rid of, hold for different commodities and things. So I'm going to ask you, buy, hold, sell, real estate, Bitcoin, the S&P 500. And then one of the other ones was buy, hold, sell, and you have to choose one of each: copper, silver, and gold. And his answer was really interesting. I think, I don't know if I would choose the same thing as him, but he's also more educated in the commodities, so I think that's interesting. So if you want to answer that for yourself in the comments down below, I think we'll all have a lot of fun. But let's say that, he also talked about how he has a prospectus out for the defense sector as a thematic ETF that's like blocks. And his reasoning behind it, where he doesn't want to just give us things that are already in the market just because they're working, just to get more market share. So he's not going to put out another AI ETF because there's just an oversaturation of them. It's very hard to concentrate on, all of the AI ones because there's just so many right now. So he wants to go into different sectors like nuclear and defense. And he also went a little bit into why he decided that he wants to do like actual businesses and not just the commodities that will appreciate or not in value. And I appreciate that. And then he talked about how they had the hedge correct, but they got the timing of the hedge wrong, which I'm pretty sure that for their team that was really infuriating, because if they had their hedge and it was, a month long instead of a week long or whatever the time period happened to be, they would have looked like heroes, but instead their fund went down. So that's the thing with how gambling in the market works and how timing things work in the market. You could be correct 60-70% of the time, but when you're wrong, it's ugly. And then he was talking about how, because they're managed by Tidal as well, and they were the first ones that wanted to do the lightning spreads. And so when some of their portfolio, the part of their portfolio that is experiencing a drawdown, they are selling puts on it. And the stuff that is up and showing upward momentum, they're selling calls on. And so they have put spreads and they have call spreads, and they're dynamically choosing which one based off of market conditions, which I think makes perfect sense. And so it's still highly volatile. At least Blocks is highly volatile because it tracks crypto. But I think that the way that they have set up their fund is it's a really interesting mix. This is not financial advice. It's just my personal opinion on Blocks, but I think it's a very well put together fund. And then tomorrow I'm going to do the Rex shares, and then there's also one on Friday. And I have a conflict with that one, so I might get there a little bit late. But for YieldMax today at noon, I actually switched after they made their initial announcements into the Ambassador Quant space, and then quickly went back after I realized it was recorded. But they confirmed that for ULTI, they will be targeting a 70% distribution. However, if the market is like super, super, super good, we might see more than 70% yield. And if market is bad, if volatility is down, they might target less than 70%. It just depends on the fund manager's best judgment, which is all that we've been asking for ULTI. I think for me, it's not, because they did talk about how people have been wanting, these blue chip stocks and lower volatility things and giving us less money to keep the NAV, but it is ultimate income. But it has always been with the knowledge of you cannot totally destroy the NAV. This cannot be a dividend trap. That's just such a fundamental thing that it wasn't discussed, because I think it's implied that your entire fund can't blow up. So I just did a video on this yesterday, but I'm cautiously optimistic about ULTI's change that they've gone through, but I'm not increasing the amount of ULTI that I have, at least for a few months, until we've seen how they do. But I wish them the best. And then they keep getting asked, like, are we going to have a fund that pays every day? And they said probably not. Like, they'll have funds that, so like YieldMax has their different groups. So they have 3 different groups right now. So each of those funds that are in that group pay that day of the week, but they're only paying, like Misty's only paying once a week. And there has been a problem with the clearinghouse with like if you're using Robinhood and a few other brokerages, because Misty went through the reverse split. The money for the distributions was taken out of the YieldMax, like it was debited from YieldMax, but they weren't aware that the brokerages themselves hadn't paid out the distributions. So that should be resolved relatively soon. But YieldMax team, they voiced their displeasure at how that went down, and it should not be happening because they should be able to process payments. But they pointed to that as a reason why, like, these clearinghouses are not equipped to handle the same fund dispersing money every single day. So they have to be cognizant of how the actual infrastructure of how people get paid out, how that'll handle their demands. And so that was an interesting discussion. And then they said that in 2026, they are going to have a lot of fund launches. So I guess be prepared to listen to more things about YieldMax next year. And it was really interesting too when they were talking about ULTI and how they've changed the correlation between things. And he argued, Michael Khouw argued that it's not that these blue chip stocks are like better companies. I would say they have like better fundamentals, but he said like they're higher valuation or value companies. It's fine, nitpicking over here. But one of the things that got ULTI into trouble is that even though on paper a lot of these tickers, they don't seem correlated, but when you have high beta things that are risky, it's the same type of investor that invests in all of them. So when there's adverse market conditions, if it's the same investor that's invested in all of them, even though they're across sectors and everything, they actually wind up being correlated because the same risk on investor invests in them. So they're trying to do non-correlated and just make sure that ULTI is better protected by just having a more diverse set of holdings, which is something I told them about. And so moving on, just literally moving on. Max Convexity invited me to his office Christmas party, and it's going to be from 3:45 p.m. to 6 p.m. on this Friday on December 12th. And so he's using StreamYard, and it's going to be live on X and YouTube. So you're going to see all the different fund managers. If you have any questions for any of these fund managers, just let me know. I also set up a meeting or an interview with Michael Khouw for we're past that, January 5th. And the reason I actually invited him this time was because he mentioned in the Twitter space that he's actually going to set up an income portfolio and he's going to try to live off of it next year. And I just want to discuss his logic behind how he makes up his portfolio for his investings that he is going to live off of. I think because I am currently living off of my investments, but I'm like super crazy and it's definitely not sustainable. And I'm having to like have YieldMight be more useful for everyone so that I can get more subscribers so that we can use this to alleviate my need for being living off of my distributions. But he is rich. So it's going to be interesting to hear his thought process about different risks and the allocations that he has and what he's targeting as a distribution rate in his portfolio. So I'm looking forward to that, and hopefully we can get a really good discussion out of him for how he's creating his own income portfolio. So on YieldMite.com, which you all probably know, I am the creator of YieldMite. And while I was listening to all these spaces today, I was updating some of the ticker information because, you know, I do it all manually. So, but one of the new features that I have here is a lot of people have been asking me about this on and off. So this is how it's defaulted the entire time we've known YieldMite, where WPay and all of these, they declare on Monday. All of these declare on Tuesday, Wednesday, Thursday, etc. And that's how I think about it, because I want to know, like, I want to know if I need to buy into the ETF before the ex-div date to get that distribution. But what you could do is actually, based off of the distribution, wait until the ex-div date to get a reliably lower price, to get a better price point for your ETF. So now you can use this drop down, and now we're doing the ex-div date. So MSTW and all of the Round Hill weekly pays, they declare on Friday, and the ex-div date is on Monday, and then W pays on Tuesday, and so on and so forth. And then we have it by payday. So a lot of people think about it as, when do I get my money? So the YSpy and all of these from Granite Shares and Blocks, they declare on Thursday, the ex date's on Friday, and they pay on Monday. And the actual timing of you receiving your funds depends on your brokerage. Some of these do it in the morning. Robinhood does it the night after. So just because it says Monday doesn't mean it's actually going to be Monday when you receive it. Just putting that out there. So that's new for now. And today on Financial Philharmonics, we have Perfect Soup for a Rally. It is a danceable rap trap song about how we have the perfect ingredients for a rally. And I was listening to Tom Nash yesterday, and he said that, and I was like, okay, this sounds like a good song. So after we heard about the rate cut, I decided to publish it because I didn't want to jinx the rate cut, because if there wasn't a rate cut, it would have been like we have a sad December, and I would have had to create like a sad Christmas carol or something about how everything's awful. I don't know. And speaking of awful, today's winter announcement from YieldMax, and that it'll get updated after the close today on YieldMite. But if we're looking at winter, I was kind of devastated because winter has been pretty consistently paying like 0.6, 0.8, like over 100% yield. And then I guess there was lower volatility because of Thanksgiving, but it was only a 0.39%. And I'm like, now I'm a couple $100 short of making enough money this week. But you all are wonderful and are starting to do subscriptions to YieldMite. So hopefully I I don't have to do anything crazy in my portfolio to try to get more income. I will just add more features and make YieldMight more useful for people so that you all will start subscribing to YieldMite. Anyways, thank you so much to the members of this channel. I am so glad that you've decided to make your bad financial decisions together with me. Thank you, Jetta, Omega Werewolf X, Opinion in Mine, BGP Automotive, Patriot Spalding, Bill Bryant, Shane O'Mac, Michael Holiday, Scott Behringer, Leroy Gibbons, Russell O'Mahony, Next Up 4E, Joey Davis, Brian, M. Curry, and David Haddock. You all are amazing. And my question for you today is the game. Buy, hold, sell Bitcoin, real estate, the S&P 500, and buy, hold, sell gold, copper, silver. And I will talk to you later. Bye.